Good morning, boys and girls. Bitcoin just closed above $81,000 on the weekly candlestick, but don't get too excited yet. The US stock market could shake things up when it opens. Morgan Stanley's strategy team pointed out last Sunday that after a sharp decline since February, US stocks have recently shown signs of a short-term rebound. The bank's analysis shows that current market sentiment and position indicators are in an oversold state since 2022. Combined with the expectation of a rebound in seasonal trading in late March and the potential boost to corporate earnings in the first quarter from a weaker US dollar, the market is expected to usher in a technical repair. However, despite the short-term rebound momentum, technical concerns remain. The S&P 500, NASDAQ 100, and Russell 1000 Growth Value Index have all fallen below their 200-day moving averages, a key level that has turned from support to resistance. It is worth noting that the small-cap benchmark Russell 2000 index fell below its 200-week moving average for the first time since the 2022-2023 bear market, showing the extent of the technical damage. As of last Thursday, the S&P 500 index had hit the bottom of the first half range predicted by the bank at 5,500 points. Last Friday's market performance showed that the rebound was led by low-quality, high-volatility stocks that had fallen too much in the previous period. But Morgan Stanley warned that the core contradiction driving this round of adjustments has not yet been resolved. In fact, the main reason for the current market volatility is not just the Trump administration's new tariff policy. The deeper pressure comes from the overvaluation at the end of last year, the rise in the US dollar and long-term interest rates after the Federal Reserve paused its interest rate cuts, and the new challenges facing the technology industry. In addition, the growth rate of AI capital expenditure is expected to slow down in 2025, which may impact the performance of technology giants. At the same time, the US fiscal deficit in the fourth quarter of 2024 surged 40% year-on-year, and the continued expansion of the fiscal gap will become a drag on economic growth. Policy uncertainty is also worth being vigilant about. The Trump administration's newly established Department of Government Efficiency, DOGE, coupled with tightened immigration policies and unexpected tariff measures, are pressuring stock market valuations through lower price-to-earnings ratios. Although the short-term rebound window may have opened, Morgan Stanley is reserved about the long-term recovery. The downward revision of economic growth expectations is putting pressure on stock valuations. Although quarterly earnings may rebound seasonally, it will take time to verify the sustained improvement. From a policy perspective, stimulus measures such as tax cuts and deregulation are unlikely to be implemented in the short term. If the Fed wants to restart easing, it needs to see a significant deterioration in the labor market or credit market, and neither of these scenarios is a positive signal for the stock market as well as the crypto market. The current rebound is more likely to be a low-level oscillation in the range of 5,500–6,100. If it wants to break through a new high, it will require a significant reduction in economic growth resistance or a shift in monetary policy again. The crypto and stock market are correlated, they almost go hand in hand. The correlation has increased ever since ETFs were introduced to the market. So, let's hope we get some good news in the stock market tomorrow. Then we will see some rally in the crypto market. That's all from me for now. None of what I have just said is financial advice. If you like this video, please hit and like button and subscribe to my channel. See ya.